To look at what's playing itself out on the market scene is Cobus Potgieter from a Southern Cross Capital. Thank you so much for your time, Cobus. Of course, the big thing that markets will be waiting for is the press briefing by China's finance ministry. What are markets anticipating there? Of course, that taking place. Was it tomorrow?
A very good evening, Zanati. $283 billion in stimulus. That is what markets are looking forward to.
Wow.
It's a consensus number. I mean, this is all surveys from qualified economists. Quite a significant number, given the size of that economy, I suppose, not that preposterous. More importantly, I guess, well, as important as the size of the stimulus, is how this is to be allocated. Sure. Traditionally, stimulus is, continue to fill into that, call it that property complex, continuous increasing of the supply and sort of those assets being inflated through accommodative policies. And we're sitting with a situation where the average Chinese consumer has 70% of their wealth locked up in property. Ultimately, not a sustainable model, and they are trying hard to shift towards a more consumer-driven economy. If you go the helicopter approach, essentially what the US did during COVID, where they wrote $2,500 check and then another one to each and every citizen, you can count on an American to go spend that money on something discretionary. The Chinese populace, because they have less of a social safety net and perhaps for other cultural reasons, are less likely to go out and spend. They're more likely to save, which you are trying to avoid in this situation. Yes. They're already saving through property investment. So we're looking for coupons. We're looking for relief. Essentially, more of a social safety net, more support for the elderly, and perhaps some kind of a program to buy back those dead properties, that second home, third home in a third tier city that a Chinese individual might have invested in, thinking property prices will go up indefinitely, that sort of thing, to free up some capital, to free up some discretionary spend, and ultimately support the Chinese consumer and assist in that shift in the long run towards a more consumption-driven economy.
All right. Well, talking about consumption, because a lot of the things that we consume comes from agriculture. So some of the JSE companies that came out with the numbers today, Zeda, they're coming out with interim results. Of course, we do know that they invest in agriculture. So the financial metrics, they're experiencing pressure in the interim period, seeming that the reason that they stated is the change in valuation in unlisted investments. We did see investors reacting quite negatively there, the share giving up 3%. No surprise?
No, more or less in line. Look, Zeda's no longer, it's not long for this world. Essentially, post the PSG delisting and PSG becoming by far the largest shareholder, they're doing a deal to get rid of their preposterous management fee arrangement. Suddenly, they are acting in the best interest of shareholders. Amazing when there's no minority to fleece anymore, how the behavior changes. So Zeda's been going through a process of unlocking shareholder value very successfully, very aggressively. They've sold off more significant assets. Number one, they've sold off more significant assets in this period and declared a substantial dividend in excess of 15% of market cap in a special divvy. They have two remaining businesses, and because that's an investment holding company with associate holdings, those are marked to market based. They're unlisted, but there are valuation metrics used. So that hence the loss, so-called loss, which has been reported, which is just sort of because of buoyant agricultural values that have tapered a little bit, well, quite a bit this year. They were quite inflated in the previous period. So from that basis, it's business as usual, and this thing will continue to be unwound until there's nothing left and they delisted.
All right. Quickly before we get to your stock pick, Bell Equipment coming out with a trading update, also expecting their bottom line there to drop. Not a lot of color, but we did see the investors giving that share a color, and that was red. Your thoughts on that?
Look, like you mentioned, not a lot of color. It's like at least 25%, difficult to say where that range will settle. We are comparing H2 against a very strong H2 in the previous period, off the back of a massive ramp up in working capital. And we already saw a significant slowdown relative to the second half in the first half of this year, which I believe was a 6% year-on-year decrease on the previous first half, but much weaker relative to that second half. So that trend seems to be continuing. However, the prospect for Bell is much more positive in the long run. We've seen the rejection of the deal, thinking, indicating the majority of the minority shareholders don't think it's worth 53 rand. They think it's worth significantly more. And there are a couple of sort of propositions in the pipeline, either in the form of an acquisition or successful R&D leading to a new processor rollout, which could be very positive for the company. So I remain quite positive on Bell.
All right. Something else that you are positive on, quickly, your stock pick, Cobus?
Yes, so I went with Resilient Property. It's a REIT, a real estate and investment trust. And those of us who haven't held property over the last year have had severe FOMO. Unfortunately, this recent pullback in the rates expectations has also put a bit of pressure on those real estate investment trusts, Resilient being no exception. It's a really, really well-run business, well diversified as well. Particular exposure to those sectors which have taken the most pain in the previous, or call it the post-COVID regime, and which still has significant upside for recovery. So given that, I think this is a nice opportunity to get into Resilient at a still it's a quality ticker. It's got significant growth prospects. And if you've missed out on property thus far, this might be a good opportunity to get in.
All right. Well, thank you so much for your time and really walking us through what has moved investors' money today. Cobus, that was Cobus Potgieter from Southern Cross Capital.